We'll start discussing the homework question. Balance sheet of what is given? X and Y is given as on 31st December 2017 is given to us. Equity share capital 4 lakh, 2 lakh. Preference share capital how much? 80,000, 40,000. General reserve, P&L account, bank OD, bills payable nil and 30,000. Creditors are 58,000 and what? 46,000. Okay. X Limited acquired how many shares? 15,000 shares at the beginning of the year. Balance sheet is given as on 31st December. Shares are acquired at the beginning of the year. Preference shares include 15,000 of nominal value purchased by what? X Limited. What is the total nominal value? In that 15,000 is held by us. Remaining is held by what? Outsiders. P&L account opening balance is given to us. General reserve opening balance is given to us. Then we paid a dividend of 10% for the year 2016. For the year 2016. So which means it's a pre-acquisition dividend. There is a bonus issue, but no entry has been passed for the bonus issue. During 2017, holding company purchased goods from subsidiary company at 10,000. Selling prices how much? 12,000. 40% of the goods remained unsold. Solra. Shall we? Question number? Yeah, it's a homework question. So check the answer. Otherwise, do it along with me. Step 1. Step 1. Proportion of shares held. How many shares are there in subsidiary company's balance sheet? 2 lakh divided by 10. How many shares? 20,000 shares. In this, how much X Limited holds? And minority shareholders balance. We are holding how many shares? 15,000 and what? 5,000. 15,000 and 5,000. What is the ratio? 75%, 25% ratio. And preference shares, rupees 15,000 held by holding company, that is X Limited. Balance 40,000 minus 15,000. How much? Rupees 25,000 held by outsiders. This is only for a reference, not for any ratio. Not for any ratio. This is step 1. Start. Step 2. What is step 2? Capital profit. Whatever is earned before what? 1/1/2017. What was the general reserve? 20,000 less bonus shares. General reserve bonus shares not recorded in books. General reserve bonus shares are not recorded. What is the bonus issue? 20,000 into 1 share for every 10 shares held into 10 rupees. 20,000 zeroed. P&L account. What was the opening balance? It's given 30,000 less pre-acquisition dividend. Two lakhs into how much percentage we paid? 20,000. So balance 10,000 will be there. Any preliminary expenses, any revaluation? Check for any preliminary expenses or revaluation. No preliminary expenses, no revaluation. So 10,000 is the capital profit. This will be shared by X Limited and minority. In which ratio? 75%, 25% ratio. How much it will be? 7,500 and what? 2,000. Step 3. Revenue profit. There are two methods of doing. One is by ledger method. You can prepare which account? Reserves and surplus account. What is opening balance? Reserves and surplus. General reserve plus P&L account. General reserve plus P and L account opening balance 20,000 plus 30,000, 50,000. Two balance carried down. General reserve plus P and L account of subsidiary company 1 lakh subsidiary company. General reserve 1 lakh P and L account no. General reserve 80,000, 50,000. General reserve 50,000 alignment mistake. Okay. P and L account 1 lakh. What is the total? 1 lakh 50,000. We recorded dividend. Dividend was paid and the dividend was recorded. How much of the dividend was recorded? 20,000. What about bonus issue? Bonus issue is not recorded. It is not recorded. It's not recorded. So tally panningana, what will you get? By net profit for the year. What is the net profit for the year? 20,000 dividend we adjusted. Closing balance 1 lakh 50 was there. Opening balance 50,000. 1 lakh 20,000 is there. This is by resource and surplus account method. Or you can do closing balance minus opening balance method and you have to be careful. What is the P&L account at the end of the year? What is the P&L account at the end of the year? 1 lakh. Less opening balance. Opening balance how much? After dividend. Dividend has been recorded out of that. 10,000. So it will become 90,000. General reserve. Closing balance. Closing balance. How much is given as general reserve? 50,000. Less opening balance. Opening balance 20,000 we will take it. Don't take 0 because this bonus shares were not recorded or not recorded in the books. Not recorded in the books. If it would have been recorded already, what you would have done? Like dividend, if it would have been recorded, what you would have done? You would have taken opening balance as well. 0 after the bonus issue. This bonus issue is not recorded in the books. Now only we are adjusting it. So general reserve balance would have been how much? 20,000. So net balance 30,000. So you will get 1,20,000. Either by resource and surplus account method or by the closing balance minus opening balance method, you can get the answer. Revenue profit is how much? 1,20,000. And this will be shared by whom? Holding company and minority in 75%, 25%. This into 75%. This into how much? 25%. See, in the exam, no need to solve by two methods. Just to tell you, the bonus issue has not been recorded. That's why we don't debit, or that's why we don't adjust with opening balance. Opening balance in general reserve. Before adjusting bonus issue, we take it because the bonus issue is not recorded in the books. Other things are as usual. What are the other things? Start minority interest. Step 4, minority interest. Face value of equity shares held by minority. How many shares they are holding? 5,000 into 10, 50,000. Face value of preference shares held by outsiders. 25,000. What else? What else will come? Minority share of capital profit. 2,500. Minority share of which one next? Revenue profit. Minority share of revenue profit. 30,000. Minority share of bonus issue. Total bonus issue was 20,000 into 25%. 5,000. Minority share of which one? Bonus issue. 5,000. Don't forget, most important, Look at the stock reserve. Is it upstream or downstream? Less stock reserve. Who sold the stock to whom? Subsidiary to holding company. What is the total stock sold? 12,000 is the selling price. What is the cost of the stock? 10,000. Now profit is how much? 2,000 into 40% of the stock unsold into 25%. Why into 40%? Whether the entire stock is unsold or only 40% is unsold. 40% is unsold. Why 25% we multiply? Minorities proportion we eliminated. Minorities proportion we eliminated. So how much it will be? 2,000 is the profit in it. Into 40% of the stock is unsold. 40% of the stock is unsold into 25% minorities proportion. How much? Which one next? Cost of control. See the amount paid for shares in subsidiary company. What is the amount paid for shares in subsidiary company? What is the total amount invested? 1,76,000 for equity shares. For preference shares, how much they invested? 36,000. Equity share capital plus preference share capital. Total amount of investment you have to see. 2,12,000. Equity shares and preference shares. Face value of equity shares held by us. 15,000 into 10. Preference shares held by us. Face value 15,000. Our share of capital profit. What is the share of capital profit? 7,500. Holding companies share of bonus issue. 20,000 into 75% is our share. Holding company share of dividend out of capital profit. How much? 20,000 into 75%. We get goodwill. 9,500 rupees goodwill. Is there any goodwill in the balance sheet already given in the question? How much is given? Add goodwill in balance sheet. Goodwill in balance sheet. How much is there? Total 89,500. Totally how much? 89,500. Next step. What is the next step? Resource and surplus. Holding companies resource and surplus in balance sheet. General reserve plus P&L account in balance sheet. X companies. X is the holding. What is the general reserve plus P&L account in the balance sheet? Holding company 80,000 plus 1,30,000. Alignment error இருக்கு check பண்ணுங்க. 2,10,000. That is the reserves and surplus of which company? Holding company. Then holding company share of which profit? Revenue profit. What is the holding company share of revenue profit? 90,000. Less stock reserve. Same adjustment upstream. Okay. 2,000 stock profit into 40% into what? 75%. 40% of the stock remained unsold into 40%. Why into 75%? Holding company share. Pre-acquisition dividend, same. That 15,000. This is the net amount for balance sheet. Any mutual due given in the question? Any mutual due given in the question? Any revaluation adjustment, mutual bill, mutual due, any revaluation adjustments? No such thing. We can prepare the consolidated balance sheet. This was share capital of X, equity plus preference. So share capital of X, equity share capital plus preference share capital. This resource and surplus, minority interest, any non-current liability given in the question like debentures and the Mariada? No. Current liability will include short-term borrowings. Nothing but that bank OD. What is a bank OD of subsidiary company? Sorry, holding and subsidiary company. Bank OD partner 30,000 plus 20,000. 30,000 plus 20,000 how much? 50,000. Then trade payables, creditors and bills payable. Creditors and bills payable. This 3,000, 58,000, 46,000. Creditors and bills payable. Shall we? Creditors and bills payable. What is the total amount? 1 lakh 4,000. 1 lakh 4,000. Any tangible asset in this question? What and all will come under tangible assets? Machinery, vehicle, furniture. Tangible assets. Machinery plus vehicle plus furniture. Holding and subsidiary company can add 30,000. Bank OD 30,000, 20,000. 10 extra put. 30,000 now. 30,000, 20. Then a total of the balance sheet 7 lakh 70. So this cannot be 3 lakhs. 30,000, 20,000. No, I typed it wrongly. 30,000, 20,000. It is what? 50,000. Trade payable 1 lakh, including bills payable 1 lakh 7,000. Tangible assets add and put. Goodwill, including the balance sheet goodwill 89,500. Tangible assets, machinery, vehicle, furniture, holding and subsidiary company. Add panna 4 lakh 65,000. 4 lakh 65,000. Inventory, holding and subsidiary company. Investments, outside investments. Yes, I hope. See, let me do the working note. Investments of X and Y. Take it up. What is investment of X and Y? 2 lakh 50 plus 45,000. What is the total? 2 lakh 95,000. This includes X invested in equity shares. How much invested in equity shares? X invested in preference shares. 36,000. So outside investments will come. Outside investments will come in the holding company accounts. Okay, mutual investments are eliminated, already adjusted in cost of control. Outside investments will come. Investment, we have done the working, how much? 83,000. Inventory, X plus Y you can add. Inventory, stock, 50 plus 50, how much? 1 lakh. No, there is a stock reserve. X plus Y, what is the inventory? 1 lakh. Less stock reserve on the 12,000 minus 10,000 into how much percentage stock unsold? 40%. How much it is? 800. That's what we have done. Upstream, right? Minority interest 200. How much we adjusted? 200. And in reserves and surplus, we adjusted what? 600. 800 will come. How much you get? 99,200. Trade receivable, debtors plus bills receivable. Debtors plus bills receivable, add both. 1 lakh 50. Cash and bank balances, just add up. 1 lakh 46,000. It is not a new question. Any new adjustment we have done now? Already we have learned about bonus issue, upstream stock reserve, okay, dividend from subsidiary company. We are just adding some practical questions to our knowledge. That's all. Shall we? Last class, which question we have done? Where is the question? Padilko? Question number 9 we have done earlier. For 6 years, 7 years, how to find out? Shall we? Read question number 10. Read question number 10. Understand question number 10 before we start solving. That question number 10 is based on removal of which one? Profit. Only the profit element. Read question number 10. They are asking you as a different case. They are not the same. Okay, first one, MIL is the holding company. FPL is the subsidiary company. Is it upstream or downstream? Rolling machine costing 35 lakhs had been sold to the other company for how much? 42 lakhs. They charged a depreciation of 3,50,000. 10 is cut here. 3,50,000 on the machinery. MIL holds 80% of equity shares of FPL. Machinery balance appearing in the books of both the companies are given to us. This is question number A. Question number B is not connected to this. Question number B is totally different. They are some other holding company and subsidiary company. Ten subdivision A. Listen to it. What is the cost of the machine? 35 lakhs. Sold at 42 lakhs. Okay. So what is a 30 to 5 lakhs? Sold at how much? 42 lakhs. So what is the profit element in this? 7 lakhs. Profit element is 7 lakhs. And listen, we charge depreciation of how much? 3,50,000. We charge 3,50,000. So balance sheet date value of the machine would have been 3,50,000 minus what? 3,50,000. What is the balance sheet date value? 31,50,000. Simple. For 35 lakhs for, okay, sorry. Sold at 4,42 lakhs. What is the depreciation charge? What is the depreciation charge? 3,50,000. For what is the depreciation charge? 3,50,000. Once again. What is the cost of the machine? 35 lakhs. Let us assume I am the holding company and you are the subsidiary company. You purchased it for how much? 42 lakhs. And the subsidiary company charged depreciation of how much? 3,50,000. 3,50,000. Okay. So what is the balance sheet value of the machine? 38 lakh 85. 38 lakh 50,000 is the value of the machine on the balance sheet date. Okay. Now wait பண்ணுங்க. How to find out profit element? For 42 lakhs, for 42 lakhs, what is the profit element? 7 lakhs. For 38 lakh 50,000, what is the profit element? Clear? 42 lakhs, what is the profit element? 7 lakhs. Now for 38 lakh 50,000, what is the profit element? Cross multiply. How to cross multiply? 38 lakh 50,000 into 7 lakhs divided by into 7 lakhs divided by 42 lakhs. How much you get? 6 lakhs? 667. 6 lakhs 41,667. 667. Okay, I repeat, pay attention. The machine costing 3,50,000 was sold at how much? At rupees 42 lakhs. Now profit element is how much? 37 lakhs. We charged a depreciation of how much? 3,50,000. On the balance sheet date, what is the value of the asset? What is the value of the asset? 38,50,000. What is the profit element for that? Okay, we worked out and we cross multiplied and got it. How much? 6 lakhs 41,000. 667. 6 lakhs 41,667 is the profit element. Now, wait, pardon. Is it upstream or downstream transaction? Downstream. Downstream transaction, now what to do? The profit should be eliminated from which one? Reserves and surplus. Reserves and surplus. How much you have to eliminate? 6 lakhs 41,667. And also from which one? Assets in the balance sheet. It is not a stock. Is it stock sold or machine sold? Machine sold. And also from asset in which one? Balance sheet. What is the total fixed assets given for holding company? Holding company balance sheet date fixed assets. What is the value? 95 lakh 75,000. 95 lakh 75,000 for subsidiary company. For subsidiary company, 68 lakh 50,000. This includes this mission. This includes this mission. 68 lakh, how much? 50,000. What is the total? Less unrealized profit. Less unrealized profit. Less unrealized profit, how much? 6 lakhs 41,667. Net asset for balance sheet will be this much. This is the net assets for balance sheet. I repeat, cost of the machine was 4,20,000. Sorry, cost of the machine was 35 lakhs. Sold for how much? 42 lakhs now. Profit element is how much? 7 lakhs. Depreciation 3,50,000 has been provided. What is the balance sheet date value? 38 lakh 50. What is the profit element for that? What is the profit element? 6 lakhs 41,667. What to do with the profit element? It is downstream. Who sold it? Holding company to subsidiary company. The profit element should be eliminated from which one? Reserves and surplus. Reserves and surplus. And also from the balance sheet from the total of fixed assets. What is the total of fixed assets? 1 crore 64 lakh 25,000 minus what? This profit element should be eliminated. This profit element should be eliminated. This is which transaction? Downstream or upstream? Downstream. Look at the second case. Look at the second case. What is the cost of the machine? Cost of the computers. What is the cost of the computers given? 8 workstations at 2,50,000 each. 8 workstation at 2,50,000 each. 8 into 2,50,000. How much? 20 lakhs. It is sold for, okay, it is sold for this value. It is, sorry. This is not cost. This is not cost. Cost of the computers are given separate. Sorry. Cost of the computers only what? 9 lakh 75,000. Sold at how much? 9 into 8 into 2,50,000. 8 into 2,50,000 over 20 lakhs. So what is the profit element? Profit element is 20 lakh minus 9 lakh 75,000. 10 lakh 25,000 is a profit element on 20 lakhs. Less we charge a depreciation. How much percentage depreciation? 30% depreciation. 30% depreciation we charged. 20 lakhs like 30% how much? 6 lakhs. Okay. Value of computers. Value on the balance sheet date. Value on the balance sheet date how much? 14 lakhs. What is the profit element? Same way we have to cross multiply and work out. Here, how to work out? 14 lakhs into 10 lakh 25,000 divided by what? Divided by 20 lakhs. How much? 7 lakh 17,500. This is the total profit element. Is it an upstream transaction or downstream transaction? Who sold to whom? Subsidiary company sold to which company? Holding company. This is upstream or downstream? Upstream. So this is upstream. Upstream. What is the first part? Holding company share. Holding company share. Holding company share. 7 lakh 17,500 into how much percentage we are holding? 70%. How much? 5 lakh 2,250 should be eliminated from what? Eliminate from reserves and surplus. What is minority share? 30%. Minority share 30%. Minority share 30%. 717,500 into 30%. Into 30%. How much it will be? 2 lakh 5,000? 15,250. Eliminate from which one? Eliminate from minority interest. It is upstream. Then value of the asset on the balance sheet date. Total value of the assets. Total value of assets on balance sheet date. Holding company plus subsidiary company. How much total? 75 lakhs less unrealized profit. Less unrealized profit. What is unrealized profit? This 7 lakh 17,500 will be eliminated. Net asset value will be this amount. So what is the difference between the previous case and this case? Previous case, full profit we eliminate from which one? Resource and surplus. It is upstream. Holding company share is eliminated from resource and surplus, and minority share is eliminated from which one? Minority interest. This is the total value of the asset for the balance sheet. So 75 lakhs minus 7 lakh 17,500 will give us net value for the balance sheet. Whenever you are solving a holding company accounts question, refer to the theory, the first 4 or 5 pages, or refer to the theory, then start solving. You will find the concepts will come automatically. Read next question number 10 we have done now. Which question next? 11th question being done. Compared to the question that we have done in the past, question number 11 is simple. You will have a dividend adjustment, revaluation adjustment, that's all. Any doubt in the last one? A or B? start doing question number 11. Try to work out up to step 3, then we will see. No new adjustment. All the adjustments in question number 11 you have done already at least 4 or 5 times. You can try question number 11. We are not given date of acquisition. Look at the question. How many shares are acquired by us? 75,000 shares at 11 rupees, and this includes debentures purchased also. 8,55,000 includes what? Debentures purchased. Let us not consider that. As of now, for proportion, let us consider only what? Shares purchased. Adjustment number 1, P&L account and general reserve is given. From that, dividend was paid and credited to P&L account is given. Revalue the fixed assets by how much? 1 lakh more, and we have to adjust 10% depreciation for what? Post acquisition profit. Mutual due, mutual bill, we'll adjust in balance sheet. We'll adjust in which one? Balance sheet. So, how many shares are there in subsidiary company? 10 lakhs divided by, please do it fast, 10 lakhs divided by 100 rupees. 10 rupees. So, 1 lakh shares are there. In this, how much holding company holds? C limited and minority. 75,000 and what? 25,000. So proportion is 75%, 25%. This is the proportion of shares held by holding company and minority. Capital profit on the date of acquisition, it is given to us. What is the profit and loss account balance given? On the date of acquisition, 1,50,000. From this, a dividend was paid. Dividend 10 lakhs into how percentage? 15%, 1,50,000. Net balance how much? 1,35,000. General reserve, oh, zero item. Then general reserve on acquisition, 60,000. Revaluation of which asset? Fixed assets. How much? 1 lakh. Any preliminary expenses? Any preliminary expenses? No. Take it up fast. Don't wait. Take it up fast. We must work out very fast. We must go fast. This is capital profit. This will be shared by C Limited and minority shareholders. In which proportion? 75%, 25% proportion. Do that. How much you get? 1,20,000 and 40,000. Revenue profit, P&L account of subsidiary company in the balance sheet. In the balance sheet, what is P&L account given for subsidiary company? 2 lakhs. Less opening balance. Opening balance after dividend, it became what? 0. So balance is 2 lakhs. General reserve of subsidiary company in balance sheet. What is it? 2 lakh. Less opening balance. Less additional depreciation on increase in fixed asset. Extra fixed asset how much? 1 lakh into 10%. So revenue profit. How much? We require more speed of writing, more speed of thinking. This problem should be solved in 20-25 minutes of time. To read, to solve the steps and prepare a balance sheet, total how many minutes? 25 minutes. Start other steps. Any stock reserve given in the question? Any stock reserve given in the question? No. Start. What is the next step? Minority interest. What is the face value of shares held by them? 25,000 into 10, 2,50,000. Then their share of capital profit, minority share of revenue profit. Any bonus issue? No. Should take amount paid for shares only. You should take amount paid for which one? Shares. What is the total investment held? Balance sheet, asset side பாருங்க. What is the total investment made by us? 8,55,000. In this, we purchased this 7,50,000 shares at what? 11 rupees. Debentures should not be taken here. 75,000 shares we purchased for 11 rupees. Debentures should be taken like a mutual due madhira. That should not be taken as what? Investment. Face value of shares held by holding company, 75,000 into 10. Holding company share of which profit? Capital profit. Dividend, what is the dividend? 1,50,000 into how much holding company would have got? 75%. Is it goodwill or capital reserve? Capital reserve. Any goodwill given in the balance sheet? So this will be included in reserve center plus. Debentures investment should not be considered here. That should be taken as what? Like a mutual investment. Like a mutual investment you should consider. This question, there is no stock reserve. There is no stock reserve. What is the reserves and surplus of holding company? General reserve plus P&L account பாருங்க எவ்வளவு இருக்கு? 3 lakh 20 plus 1 lakh 40, how much? 4 lakh 60,000. Share of revenue profit. Holding company share of revenue profit 2 lakh 92 500. Pre-acquisition dividend 1 lakh. No stock reserve in the question. No stock reserve in this question. Share capital of holding company will continue in the balance sheet. What is the share capital of holding company? 12 lakhs. This reserves and surplus. Oh, very good, very good. This also should include which one? Capital reserve. Add capital reserve in the step 6. Include that also. Minority interest 3 lakh 87 400. Long term borrowings பாருங்க. Look at debentures. Debentures இருக்கா? What is the debentures? Holding company and subsidiary company. What is the debentures? Total 1 lakh 10,000. 15,000. 1 lakh 15,000. In this debenture, less mutually held. How many debentures we are holding mutually? Asset side par. 300 debentures into 100 rupees, 30,000. Net amount will come. No short-term borrowing. Trade payables, add creditors and bills payable of holding and subsidiary company. Both creditors and bills payable of holding and subsidiary company you add 1,32,000 less mutual bill. What is the mutual bill value? 5,000 less mutual due. There are two things given. Look at the last adjustment. Mutual bill 5,000. Mutual owing how much? 30,000. Mutual owing means debtors and creditors include that amount. So eliminate it. Fixed assets. Fixed assets in this question. Add holding and subsidiary companies fixed assets. Holding company and subsidiary company fixed assets how much? Balance sheet values 4 lakh 50 plus 8 lakh 4,000. What is the total? 12 lakh 54,000. Add revaluation. What is the revaluation we have done? 1 lakh. Less additional depreciation. Additional depreciation how much? 10,000. We charge it in revenue profit. 13 lakh 44,000 for fixed assets. Inventory, nothing but the holding companies plus subsidiary companies inventory. No mutual, no stock reserve. No stock reserve. Add both. 1 lakh 15 plus 1 lakh 40. 2 lakh. Then trade receivables. Holding company and subsidiary company, debtors and bills receivable. What is the debtors and bills receivable total? 5 lakh 3,000 minus mutual bill minus mutual due. To how much? 5 lakh 3,000. Debtors and bills receivable minus mutual bill and mutual due. It will be eliminated from asset also. Cash and cash equivalent is nothing but cash plus bank balances. 2 lakh. What is the investment given in the balance sheet? Investment given in the balance sheet, how much? 8 lakh 50. Okay, that subsidiary company investment will come. Investments of which company? Subsidiary company. Holding company got tallied, subsidiary company will come. How much? Still it is not tallying. Why? Let us check. Let us check. It is to do with investments only. Check the balance sheet total also. After that, we'll do that. Wait, pananga. Look at the investments, please. Investments of holding company and subsidiary company. Add both investment of holding company and subsidiary company. 12 lakh 66,000. In shares, we have taken for cost of control. In shares, we have taken for cost of control. That is already adjusted in cost of control. Adjusted in cost of control. How much we adjusted? Investment in shares. 8 lakh 25,000. 8 lakh 25,000 we adjusted in cost of control. Then in debentures, on the 300 debentures into 100, like a mutual owing, we adjusted how much? 30,000. 4 lakh 11,000 it comes. Why there is a difference? Okay, check the balance sheet total. Which one? Asset side add panni parunga, how much it comes? Check the total of balance sheet. Check the total of balance sheet. Coffee Limited, liability side, what is the total? Asset side, what is the total? 19 lakh 80,000. Asset side, it is correct. So what is the difference? 1 lakh 80,000. Check the T Limited's balance sheet total also. That is telling. So what is the difference? Difference in balance sheet given. You should write it separately. Difference in balance sheet of which company? Holding company. Assets minus liabilities. What is the difference? 1 lakh 80,000. Now it tallies. Again, I am telling you to see examination. Don't think that if the balance sheet is not tallying, the question is wrong. Okay. the balance sheet is not tallying, then you should express by how much amount the balance sheet is not tallying. That is only a BCom approach. If balance sheet is not tallying, question is wrong. As a chartered accountant, whether the client will give a tallied balance sheet, there may be with errors. You have to identify what is the error. Clear? So here the difference arises because of which one? Difference in balance sheet of which company? Holding company. Asset side total is 19 lakh 80. Liability side total is only what? 18 lakhs, or difference of 1 lakh 80,000 arises due to difference in balance sheet of which company? Holding company. Investments are reconciled. Investments, there is no difference. Investment, literally there is no difference. Those who completed, go to question number 12. Question number 12. In that question, also try to work out how many steps? The first three steps. What are the first three steps? Capital proportion, capital profit, and which one? Revenue profit. There are no adjustments in the question, but only thing is that shares are purchased during the year. Shares are not purchased at the beginning of the year. They are purchased during the year. Shares are purchased on what date? 1st October 2013. Opening balance of reserves and P&L account is given to us. Subsidiary company purchased goods from holding company. Okay, so at a profit of 25% on cost. Stock reserve downstream. What is the proportion of shares held? What is the total? Balance sheet level share capital 2,400 divided by rupees 10 each. So 240,000. In which how much holding company holds? 168. Balance 168 is to 72 can be written as how much percentage? 70% is to 30%. So what is the general reserve opening balance? We can maintain in thousands. We can maintain in thousands. Adjustment like opening balance how much? 5 lakhs means 500,000. P&L account at the beginning of the year 800,000. We are maintaining rupees in thousands. Plus net profit till the rate of purchase of shares will become pre-acquisition profit. Let us work out that. What is the balance sheet of S Limited General Reserve? 600,000 minus opening balance 500,000. So 100,000 in General Reserve. P&L account balance at the end of the year 2014 balance sheet 1,000 minus opening balance 210 will be there. What is the net profit for the year? 310 is the net profit for the year. So net profit in this 310, how many months? 6 months will become capital profit. So what is the total? In this, how much percentage to holding company? Minority. Post acquisition profit 310 into the remaining 6 months. First 6 months capital profit, next 6 months revenue profit. So holding company will share this into 70%. Look at the amount paid for shares. How much is given in the adjustment? 1952. Face value of shares held by us 168 into 10. Pre-acquisition profit and bonus issue. There is no bonus issue. Goodwill or capital reserve. Minority interest. What is the face value of shares will be then? 72 into 10. Their share of capital profit, their share of revenue profit. Take the resource and surplus of holding company. What is the resource and surplus of holding company? What is the resource and surplus of holding company? 2,300. Revenue profit share 108.5. Stock reserve 50,000 into what is the profit margin given? 25% on cost. 25 by 125. That is 1/5 on sales. 1/4 on cost. It will be what? 1/5 on sales. 25,000 into 50,000 into 25 by 125. How much? 10,000. Add which one? Capital reserve in step 5. What is the capital reserve in step 5? So reserves and surplus, including the capital reserve, is the total of all these things. What is the total? 3145. Capital reserve? Hmm. Including the 312. Including the capital reserve, it is 3145. Start doing the balance sheet next. Try பண்ணுங்க. What is the share capital of the holding company? How much? 4,000 rupees in thousands. Everything rupees in thousands. What is the share capital of holding company? 4,000 thousands. Apram. Reserves and surplus, we have done the working. 3145. Minority interest 1203. Any long term borrowing given in the question? Like debentures and the money? No. No long term borrowings. Trade payable, nothing but creditors plus bills payable. No mutual due, nothing. How much? 1105. Then that short term provisions. Short term provision is nothing but this provision for tax. Provision for tax will come under what? Short term provisions. What is the provision for tax? 300. Other current liabilities. Other current liabilities is nothing but that outstanding expenses. How much? 80. Tangible, plant and machinery plus furniture. Plant and machinery plus furniture. 5514. 5514. Inventory of holding and subsidiary company minus stock reserve. Holding plus subsidiary company, what is the total inventory? 17 less stock reserve. Stock reserve how much? 10 less panna. To the other side. Inventory, holding plus subsidiary company minus stock reserve. Trade receivable, holding company plus subsidiary company. How much? Debtors and bills receivable. Debtors and bills receivable. How much? 1598. Then that loans and advances. 4 cash and cash equivalents. 5 valid. This is for question number 12. 13, 14, 15, 16, 17. Till the end, you can find the similar type questions are there you are going to solve. We have done regular problems around 8 to 9 problems. Then assignment problems also we have done. And this up to 12th question we have done. Okay, you can try the next 5 questions. There is no extra adjustment. Whatever we have done so far, you are going to do it again. Please try it at home. Then in consolidation, one small area pending that will take only 10 minutes or 15 minutes of time. 10 to 15 minutes of time. That is consolidated. Which one? Consolidated income statement. That I'll do it in the next class. I'll do it in a separate class. But ensure that you are trying which question? Question number